We talked a little bit about this morning. COT data wise, what's on our immediate watch list? Most interesting stuff.
Okay, so commodities aren't looking very good. They are not buying gold. They did a little
Yep.
bit, but they're outnumbered in the number of short contracts. They're selling gold pretty clearly. S&P, NAS, they're being bought pretty aggressively, so that's something I've been looking at. I just entered a long trade a few
Oh, did
minutes
you?
ago before the live
S&P?
stream on the S&P,
Okay.
and it's due to that, and also the way it closed Friday. Just the way the candle looked, it was like a pin bar, and pretty much at break even. So this morning's recent sort of push upwards was, I guess, some optimism for me. So I'm looking to hopefully be in at the lows here before the S&P starts turning around. And could you scroll down to the positional bias thing
Mhm.
and filter it to the S&P, because I think this is definitely something very important to look at, is the positional bias. Whenever it loads, you'll see the bars when it's below
Very nice.
that horizon, that horizontal line. That's a bearish view, but once you go above it, it's a bullish leaning sentiment. And so we've
Wow.
been in the bearish sentiment ever since we built this tool. So the only thing that we can notice, though, is from early June up until now, that sentiment, the bearish sentiment, has been slowly and steadily declining and getting closer and closer to kind of an even playing field for a COT. But
This is
what
this
we've
is really
noticed,
powerful, Frank, just being able to see this. So we
yeah,
have
'cause-
So like this, the basic idea is we're looking at the positioning week over week of the S&P 500, and what we can see is like there's a clear rise in bullish interest. Now, of course, there was peak short interest. Now it's kind of fading, and now we're actually starting to see, like you said, we're heading back to the 0 point, which above this would be just a clear bullish preference on S&P.
right. So we are, if we were to just look at who is more short or more long than the other, we would have like bearish sentiment on the S&P like this entire year. But no, you and I have been buying, and it's because we're looking at this sort of change, and it's not just 1 week at a time, but we've seen this for the past 2 or so months
Yep.
of sentiment flipping, and interest rates are still high. So there's that fear that yields will continue to rise as well, but smart money is still buying this. So very
Yeah, no,
interesting.
and just last point about the S&P 500, I wanted to point out. So you mentioned that this week we had some good data. For those of you guys who are watching Commitment of Traders Data, we do this, of course, every week on Monday. Frank and I jump on here. We just cover kind of the latest figures. What's really interesting that Frank is pointing out too is that look at the S&P 500. So on the S&P 500, we see a huge increase in the number of long contracts being opened up. So we got big increase in buys. But maybe more important even is that look at the number of short contracts change this past week, and we actually see a decline of 23,000 plus contracts. That's showing us that essentially they're opening up long contracts, and the shorts that were open, they're getting closed, right? So we're seeing closes on the short side and we're seeing opens on the long side. This is a pretty bullish week. And, although the percent overall is still kind of in the negative territory, this change is a very bullish increase in positive sentiment.
Did you know that you can watch Trader Nick live stream every morning, Monday through Friday, with guests from all around the world? Each morning, right here on the A1 Trading YouTube channel, we put on a live show where Trader Nick, along with some very special guests, go over their charts and ideas for every kind of asset. We do a live reaction to news drops and do analysis immediately following. You never know what's going to happen during one of our streams. So come be a part of the live stream community. You can find our live streaming schedule on the A1 Trading Twitter account each week, so you never miss a news event.
Okay, yeah, Ivan, I want to show you something. So just to go along with your point. So Ivan just made the point concept of seasonal bullishness against the yen, right? Or basically weak yen coming. I pulled this chart up while you were talking about it, and I think this is perfect to illustrate this point. So if you guys are newer viewers, Ivan, he talks a lot about seasonality, right? This concept of different parts of the year, different days of the week, different weeks of the month. There's different ways to kind of measure general market moves that are observable over time. And so seasonality it's a real thing. It's a very powerful thing in markets, and understanding what is likely to happen during, in this case, the way I'm looking at it month to month. I know Ivan does kind of more of a week to week and sort of thing, but just this concept here, I want to go off this point. So September, we're coming in, and I've got selected here the dollar against the Japanese yen. So as we close out of August, historically, the last 10 years, on average, you take all that data, every trading month of September in the last 10 years have averaged out to a noticeably bullish dollar yen of about 0.79%. Now, that's actually a pretty good bit of movement on a currency pair, because currency pairs don't move all that much percentage wise. But we see not only in September, we saw October is historically 1.11%, and November is 1.27%. Notably, this dollar strength, I think we lost Ivan's camera. He's gone missing. Maybe you just had to. I think your camera might have died or something. We'll let him sort it out for a second. So anyways, to make the point, we are coming into a seasonally bullish part of the year. September, October, November. Ivan keeps talking about, yen crosses. Here's dollar yen, right? So we're expecting the dollar yen to start strengthening in the coming months. So this is something that, you guys should really be paying attention to, at least acknowledging like, hey, there are some trends that I should be aware of. And so this is why we've built the seasonal trends data that we have. Noticeably, you guys know I love trading the S&P 500. We're coming into seasonally some of the worst historical parts of the year, right? September and October, right? Which would make a lot of sense given that we just talked about potential dollar strength against the yen specifically. But again, seasonality wise, very interesting time of year that we're coming into. And again, I've just selected the S&P 500 now, but we were just looking at the dollar yen to give us a general idea of historically how these months tend to perform. So just a really, really important topic is to understand seasonal trends in the market. Ivan, you're back. Welcome back.
Thank you.
Did your camera die?
Thank you. Nah, I don't know what. I don't know. Everything is. My headset doesn't work today sometimes. My camera goes off. If I put on the blur, it kind of messes up the frame rate. I don't know what's going on today. Maybe I just need to go back to bed.
It happens. No worries. So I just tried to add a little bit of, while you were sorting out the camera, just seasonal data and how important it really can be in markets. I thought it was also interesting, Ivan, that we're coming into probably not only just seasonal trends for the yen, but also seasonal weakness for the S&P 500 coming around September is historically a pretty tough month. Do you have any thoughts on that? So, I mean, would it make sense kind of to look, you got the yen, you get the S&P 500. There's some interesting trends that are coming up here in the next few weeks and months.
Yeah, so what I do, and I would say September, by any chance, by any means, is a buying month for me. If you say it's gonna go bearish, I'll be like, hallelujah, I will try to catch the bottom there. Either that or more like towards October, especially on S&P, that's when you will find me more active. But right now, I'm 100% on yen. Dollar kind of does something, euro kind of does something, but I'm expecting quite an aggressive uptrend going forward, either this week, next week, or just a general continuation trade to the higher. So I'm just hoping and praying that people do remember that if you do decide to sell yen pairs, it's a quite a uphill task if you decide to do so, because I have had traders that done that before and they have been blasted. But
that's why I'm saying it's so important to at least acknowledge seasonal trends. Ivan, we've been doing this together for a long time. We've looked at fundamentals, we look at seasonal data, we look at all this stuff. And I guess a question for you. Sometimes people say, I only look at the chart. I only look at the technical analysis side of things. What do you say to those people? I mean, obviously, you and I don't just use purely technical charts to make our decisions, but coming into, again, where we're pointing out these seasonal trends and how important it is to acknowledge them. Here's dollar CAD. I pulled this one up. Dollar strength does seem to be kind of apparent in September and October, slightly, a little bit more in September, at least in the dollar CAD's case. But, what would you say to people who are, I purely trade technicals, coaching Ivan, or Ivan's coaching session here? What would you say to him?
I will say, if that was the case for me and my profitability, if that was the case, I would go only technicals. I would always pivot and gravitate to where I would find profitability at max. But I found out that this is how many years ago? This is 6 years ago at least, where I'm like, why is yen pair so strong in August, September? Why does it go so fast so quickly? And why is it like 300 pips in a week and I lost it? I was even trying to sell it. Like, why is this happening? It comes up from the why. Then I started digging into how can I benefit from that? And then I discovered something called seasonality. I didn't even know that, only because of me losing my trades and losing money. I'm like, this has to be something greater. And there is trends that I can't describe, I can't explain, but I can only see them.
Yes.
And it becomes like for me, seasonality and fundamentals becomes a self-fulfilling prophecy. There is groups in the market that's like opposite, someone bullish, someone's bearish. But when the majority of the traders comes together and finds the same kind of direction, it becomes this self-fulfilling prophecy, and it goes really quickly. Well, the thing with gold is pretty interesting, I would argue. As who did it? Bailout 88 said that you have to wait until like December for gold to be bullish. Seasonality radar doesn't talk specifically about August to be a fantastic good month. I think it's supposed to be bearish now, which it kind of is. So when it's not bullish, I'm kind of just staying away from it.
Yeah, fair enough. Yeah, gold has been really under pressure due to all the China stuff, and I think fundamentally right now it makes a lot of sense to be very, very cautious on the bullish side. You have China is like the leading demander of raw materials, and if their economy is all slowing down, that coupled with projections for interest rates to stay elevated for a longer period of time, there's some bearish headwinds for gold right now. Will it be bullish? Sure, at some point, but right now it just seems like some headwinds. I've also just redrawn my trend line to adjust for this recent spike to the downside. This looks pretty strong here today, this morning. Will be questionable to see what happens if we start to get back down to the previous lows. For gold sellers, can we break through those lows? That's going to be the question. Or are we going to kind of triple bottom and break out? So we'll see. But for me, I would be kind of interested for a breakout, pullback, and then shorting opportunity. On the short term, I don't mind it. So that's something I'm watching.
But why didn't you, if you're looking for short, why didn't you short one like 1890 something then? Or
18 up there. like here?
Yeah.
Well, actually, so to be honest, I mentioned this earlier in the stream, Ivan. I was going to actually look to short right around here. But by the time I looked at it, so by the time I got like into the office and everything, the candle had already kind of formed this big breakout. So I was like, oh, well, you know what? I might have just accidentally dodged a bullet, because if I had shorted this, if I'm being honest, I probably would have put my stop right above here, and I probably would have had a really frustrating morning. So I really got lucky with that, because my stop loss 100% would have just gone up right above this, and then I would have had tons of comments saying, haha, your liquidity kind of thing.
You went to the
I am still short bias in the short term, but I think that I've missed the boat here this morning. So if I do take this trade, what it's going to look like for me is probably break, retest, lower low. We'll see, but that's aggressive. That's kind of a aggressive short, I would say.
Yeah. Do you know what I would call that trade from henceforth going forward?
What would you call it?
That's a bacon trade.
Bacon trade. Why is that? Bacon trade.
Because
Explain that.
you went to the slaughterhouse where all the pigs get slaughtered, turned into bacon.
Well, it wouldn't have been the first time, Ivan. That's happened to me, admittedly, plenty of times in my trading career. And people, we're joking around, Ivan, but of course, like for people in the audience who are like, yeah, that would have looked stupid. You're totally right. But, no matter what you do with a stop loss, sometimes you are quote unquote liquidity. Sometimes you put a stop loss out there and you think you're being smart, right? Let's say instead I entered here, right, where everybody stop losses, and I'm like, haha, I'll just put my stop loss up here. The next time around, what might happen is that it hits your entry and then it just does this, and then you're also liquidity, right? So you can always play the you shoulda, coulda, woulda game, but it's frustrating when it happens. There's no question. But unfortunately, I didn't take the trade, so I got lucky.
Yeah. So Chandler, for henceforth going, every time you have a trade that goes quickly to stop loss, it's a bacon trade.
Bacon trade. That's a good name for it. I got taken immediately to the good old house. Yeah, we'll see what happens with gold. Still bearish pressure, and fundamentally short-term fundamentals to me look pretty bearish until we start to see some of this dollar strength crack, which I guess, Ivan, where are you at with the dollar? Are you what do you think? Dollar strength has been a lot longer lasting than I thought it would be. What do you think?
Well, I haven't looked at dollar for quite a while, to be honest. Mostly because it's just been bullish. It's been one direction.
You've been trading the yen a little bit more.
Yeah. Also, it's summer, so I'm like, whatever happens kind of a thing. And also, it's quite rangy at the end now. So I'm like, if it's just ranging, I'm not gonna bother when I have pips to catch on yen. So yeah, and also for euro yen, your dollar, sorry, it's bearish. Comes back up to 109 to sell it again. Sure, bearish to sell is clear as a day. Nah.
Yeah, it's definitely, like I said, I think the dollar bullish case right now. This week will be very interesting. We have Jackson Hole this end of the week, which will give us some insights, some commentary on where the Fed is at. But I think a lot of fear is that people are expecting kind of just this round off on the dollar, where interest rates would stay at where they're at, and then they'd start to come down. Now I think the kind of the scary thing is, are interest rates going to go up or stay where they're at for a prolonged period of time, right? Because there's two sides to that interest rate story. It's raising rates, cutting rates, but then it's also, holding rates at an elevated level for a long time is causing some fear, because it's like, well, stocks are going to get hit by that. Companies are going to, that's cutting right into their profit margins. And, that could lead to people getting laid off and potential recession fears. And so, we're kind of in that headspace right now. At least that seems to be the narrative.
Well, I have seen the data lately, which has been better than expected, which would support that case of what if we have higher rates or this rate level for higher period of time. Yeah, but there's two ways to look at it. Are we going, because it's all about the future rates, right? It's all about, are we able to see where we're going to be in 3 to 6 months, which is the market is always going to think about. Yes, now we're going to probably peak that a bit higher or take that dollar a bit higher, but what is the future going to be down the line? Because somebody asked you about, would you trade to 200 with the same interest rate, and you said yes, and the answer to that is yes, but it depends on the rate projections. If one is going to increase and one is going to decrease or peak, sure, fine. But with both, it's going to increase going forward, no. So for me, I'm still on the dollar bearishness move. I think it's going to fall at some point, which is still a bet and still just what do you call it? I'm imagining a thing that I'm expecting to see, and I'm just waiting for that to come into works, and it hasn't happened yet. Sure.
Yeah.
But also about losing jobs, as Powell said, we haven't lost as much jobs as they expected us to do with the rate hikes I have been seeing lately.
Yeah, no, I would classify myself as very neutral on the dollar at this point. I wouldn't say I'm like totally bearish, but I'm also not bullish. With the China situation too, I think there might be this kind of thing where, everybody thinks the U.S. economy is just going to stay super red hot, and that's also driving the dollar higher. Well, China's slowdown could have kind of contagious effects to the United States and other places that of course do business with China, and that could cool the global economy a little bit and actually weaken the dollar, I think, as well.
Why would China reducing affect America?
So the idea would be, if China is like the massive demander of oil and silver and copper and all these things, these natural materials, and that kind of is showing signs of slowing. The way I heard it on this podcast that I was on recently, the gentleman I was on, the Oana senior market analyst, he said they could potentially export their disinflation. So that slowdown in demand for everything could kind of be contagious and flood out in every direction. Will that have huge impacts in the US? It's probably going to be more dependent on what the Fed is up to than what China is doing, but it has, the potential to eventually take some of the attention of the Fed and maybe change some of their policy, just because, again, they are the second largest economy. They have a lot of potentially impactful things. If they're cutting their rates, if they're, seeing unemployment, if anything like that, there is that potential for some shared pain to other places.
Good answer. I know I put you on a pedestal there, but the very quick answer is, if China goes lower, Euro subsequently has to then go lower, because they are the demander. And who is the biggest trading partner with Europe? America. But the other thing is, America is 75% of GDP is domestic. So it's not a great deal that China slows down, but it has more risk sentiment impact more than anything else.
See, this, everyone, is why we bring Ivan on the show. You bring traders together, and what happens is you get more insights and more knowledge being shared. And I think Ivan and I, we learn plenty from one another. I think I learned a little bit more from Ivan, but it is helpful to do that. And I think that's why we do these shows, and that's why we do the shows the way we do them.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.